Banks are in trouble, and they don't want you to know why.
Really?
Something huge is happening in the financial world right now, and most people have no idea what's coming. The internet changed how we communicate. Web3 is changing how we use money. Imagine a world where banks don't control your money, where you don't have to wait days for a transaction, where you don't wake up to hidden fees that drain your account. No middlemen, no delays, no ridiculous fees, just you, your money, and a system that runs itself, completely decentralized.
That's pretty good.
This isn't a science fiction fantasy. This is happening right now. But here's the big question. Is this the start of a financial revolution that will change the world? Or is DeFi just another crypto bubble waiting to pop? Will early investors get rich? Or will regulations and hacks bring it all crashing down? Stay tuned, because in the next few minutes, we're going deep into the world of DeFi and Web3. What it is, how it works, the risks, and whether you should invest before it's too late. The financial system is changing fast, and some say banks are about to become obsolete. Let's find out the truth.
Imagine a world where you could make trades, deposit into a savings account, or buy insurance, all without ever going through an intermediary like a bank. That's the promise of DeFi.
Picture this. You wake up, check your bank account, and boom! There's a random fee you never agreed to. You try to send money overseas, and the bank tells you it'll take 3 to 5 business days. Oh, and let's not forget those times they just freeze your money because of some random policy. Now, what if I told you there's a financial system where none of that exists? No banks, no middlemen, no hidden fees, just you, your money, and complete control, 24/7, anytime, anywhere.
So what is DeFi exactly? And does it truly have a shot at becoming the future of finance, or is it a road to nowhere?
Welcome to the world of decentralized finance, aka DeFi. To understand DeFi, you first need to understand Web3. And Web3 is all about one thing: control.
Web3, the read-write-own web. Web3 is built on blockchain technology. Think of it as a digital ledger that everyone can see, but no one can alter. It's decentralized, which means no single entity has control.
In Web2, you use banks, PayPal, and Venmo, middlemen that control your money. In Web3, you don't need them. You are the bank. DeFi is the Web3 version of banking, without banks.
In the land of DeFi, new infrastructure is being built that takes these banks and institutions out of the equation. Anyone with a computer can create some software and launch their own financial service on a blockchain, meaning the barrier to entry is much lower than in traditional banking.
DeFi is a system that flips traditional banking on its head, replacing banks with smart contracts. Smart contracts are self-executing agreements written in code that run on a blockchain. No approvals, no gatekeepers, no delays. Think of a vending machine. You put money in, press a button, and get your snack. No human needed. That's how smart contracts work. Want to borrow money? No bank is needed. A smart contract gives you a loan in seconds. Want to earn interest? No need for a savings account. DeFi lets you stake and earn high returns instantly. So what can you actually do with DeFi? Well, a lot. Let me show you some of the biggest use cases that are shaking up the finance world. 1. Lending and borrowing.
One of the most popular applications of DeFi is in lending.
Need a loan? Normally, a bank decides if you qualify. But in DeFi, you decide. Just put up some crypto as collateral, and boom, you can borrow instantly. No credit checks, no paperwork. Platforms like Aave and Compound are making this possible. 2. Decentralized exchanges, DEXs. Ever traded crypto on Binance or Coinbase? These are centralized exchanges, meaning they hold your funds. But with DeFi exchanges like Uniswap or PancakeSwap, you trade directly from your own wallet, with no middleman and no restrictions. 3. Yield farming and staking. What if I told you your money could work for you while you sleep? In DeFi, you can earn passive income by staking your crypto or participating in yield farming. Think of it like earning interest at a bank, but with much higher rewards, and of course, higher risks. More of yield farming and staking videos will be created in the future. If you are interested in knowing how they work, just subscribe.
DeFi didn't truly take off as an industry until 2020. That year, the sector saw exponential growth, with the total value deposited into DeFi products climbing 30-fold.
Why is DeFi booming like crazy? Why is it growing at insane speeds while traditional banks are, well, kinda just sitting there? A few years ago, DeFi barely existed. Today, it's a multi-billion-dollar market, and it's not slowing down.
DeFi services have attracted billions of dollars in funds, and proponents of the trend believe that it will become an even bigger industry, rivaling the mainstream financial institutions we're familiar with today.
Why? Because DeFi solves real problems. Let me show you 3 big reasons why DeFi is booming. 1. No middleman equals no banks, no delays, no crazy fees. Full control over your money. Goodbye, banks.
With traditional finance, your funds are stored and managed by centralized institutions like banks.
Banks have been running the financial system for centuries, but let's be honest, they're slow, expensive, and full of red tape. When you deposit money in a bank, who really owns it? Not you. The bank does. They can freeze your funds, limit withdrawals, or even go bankrupt, taking your money with them. With DeFi, there are no middlemen, no bank managers, no waiting days for a transaction to clear. It's all instant, thanks to blockchain and smart contracts. Your crypto, your private keys, your rules. This is financial freedom at a level banks can't compete with. 2. Higher returns than banks. Your money works harder.
These firms make money by lending out your cash and charging interest on top of the loans. They also collect various fees and commissions for the provision of their services.
Let's talk about making money. Banks suck at making you money. They give you what? 0.1% interest on your savings? Maybe 1% if you're lucky? Inflation? 5% plus. That means your money in the bank is losing value. In DeFi, you can earn 5%, 10%, even 20% or more on your crypto.
Rates on these decentralized lending platforms are adjusted by an algorithm based on how much demand there is for the loans.
And unlike a bank where they decide what to do with your money, in DeFi, you are in control. You stake it, lend it, or invest it how you want. It's all on you. No wonder people are ditching banks and going to DeFi. 3. Global access equals finance for everyone. Here's something huge. Right now, 1.4 billion people worldwide don't have access to a bank account. That means no savings, no loans, no financial freedom. In traditional finance, banks decide who gets access to money. No credit history, no loan. Wrong country? Sorry. No account for you. Want to send money? High fees, slow transfers. DeFi doesn't care where you're from. No credit checks. No banks rejecting you. As long as you have an internet connection, you can be part of the new financial system. And that's the power of Web3, giving financial freedom to everyone. This is huge for billions of unbanked people worldwide.
Yes, that sounds amazing!
DeFi's growth is insane and the numbers prove it. Higher returns, more access, total control. This is why DeFi is exploding and why banks are scared. So yeah, DeFi is taking off like a rocket. But before you go all in, there's something you need to know. DeFi isn't all sunshine and rainbows. It has risks, big risks. And if you're not careful, you could lose everything.
There's nothing inherently evil or wrong with DeFi or cryptocurrency and blockchain itself. However, you can't have trillions of dollars move into a new asset class and not attract criminals and grifters.
All right, let's get real for a second. DeFi sounds amazing. No banks, high returns, global access. But here's the part no one talks about. DeFi is also one of the riskiest places to put your money. And if you're not careful, you could lose everything.
Billion-dollar projects went belly up, and investors lost hundreds of millions of dollars to cybercriminals exploiting weaknesses in various platforms.
Let me break down the 3 biggest dangers you need to watch out for before you even think about investing in DeFi. 1. Scams and rug pulls. The crypto Wild West. First up, scams. They're everywhere.
If you haven't heard of it, consider yourself lucky, because victims lost nearly $3 billion in 2021 alone.
There are projects that launch, promise insane returns, get people to invest, and then, poof, the developers disappear with millions overnight. This is called a rug pull.
Called rug pull scam. The rug pull.
Yeah, you remember that one? A crypto project inspired by Squid Game, except investors couldn't sell their tokens. The devs ran away with $3.3 million. Absolute madness. And the worst part? No one can refund you. DeFi is decentralized, meaning if you get scammed, there's no customer service to call. Your money? Gone. And this happens more often than you think. I'll link a video in the descriptions on how you can spot these scams and save yourself before they even happen. Your money depends on it. 2. Smart contract bugs. 1 tiny flaw can wipe out millions. Now, let's talk about smart contracts. DeFi runs on smart contracts, self-executing code that handles everything. But what happens if that code has a tiny mistake?
What?
You guessed it. If there's even one tiny bug in the code, hackers can exploit it and drain everything.
More than $1 billion worth of crypto has been lost to bridge exploits so far in 2022.
This isn't just theory. It's happened over and over again. Imagine waking up one morning, checking your DeFi investment, and boom, it's all gone. That's the risk you take when dealing with experimental technology. Even the biggest projects have been hacked. Poly Network, Wormhole, Ronin, losses in the billions. How to protect yourself? Stick to well-audited, battle-tested protocols. New projects are riskier. Use insurance. Some DeFi platforms offer coverage for hacks. And never invest more than you can afford to lose. 3. Regulatory uncertainty. Governments versus DeFi. And then we have the biggest wildcard of all. Governments. Right now, DeFi exists in a legal gray area. No rules, no oversight.
But DeFi protocols aren't covered by consumer protection laws, making them riskier than products from regulated institutions.
But that won't last forever. Some countries love DeFi. Others, they want to shut it down. Governments and banks hate losing control. They want to regulate, restrict, or even ban DeFi. If governments decide to ban DeFi or slap heavy regulations on it, we could see major projects disappear overnight. And if you're thinking, that won't happen, just look at China. They straight up banned crypto multiple times. The US and EU, they're already making moves to regulate DeFi. What happens if your favorite DeFi platform gets shut down or forced to comply? Just think about it. How to protect yourself. Diversify. Don't rely on just one DeFi platform or blockchain. Keep some assets in centralized platforms in case regulations shift. Stay informed. Regulations change fast and you need to adapt. That's why I urge you to subscribe to the channel.
So please, whatever.
So yeah, DeFi has huge potential, but it's also full of landmines. One wrong move, and your money could be gone forever. So, should you still invest? Don't worry. Up next, I'll show you exactly how to invest in DeFi safely, avoid scams, and protect your money. Alright, so we've covered what DeFi is, how it works, and the huge risks involved. But now comes the big question. Should you invest in DeFi? Because here's the thing. DeFi could be one of the biggest financial opportunities of our generation, or it could be a ticking time bomb waiting to explode. On one side, we have the believers. DeFi is the future, a financial revolution that's unstoppable. On the other side, skeptics warn that it's too risky, too unpredictable. So, who's right? It all depends on how you play it.
So, is DeFi ready for prime time?
Let's start with the bullish side. The reasons why DeFi could be the best investment of your life. 1. DeFi is growing fast. Every year, billions flow into DeFi. More adoption means higher prices and more opportunities. 2. It's part of Web 3. DeFi isn't just a trend, it's the future of the internet. As blockchain tech improves, DeFi will likely evolve and become safer, faster, and even more powerful. 3. Early investors win big. Just like Bitcoin and Ethereum's early adopters, those who get in before mass adoption could see massive returns. Think about it. If you had invested just $100 in Uniswap back in 2020, you'd be sitting on thousands today. That's the power of getting in early.
Okay. That's good. That's a start.
But hold up. Before you FOMO in, let's talk about the reasons DeFi could be a disaster. 1. It's still experimental. DeFi is not fully tested. Some will succeed, but many will fail. Bugs, exploits, and security flaws could wipe out your investment. 2. Regulations could change everything. Some governments love DeFi. Others? Not so much. If regulators decide to shut it down or ban access, investors could be left stranded. 3. Scams and hacks are everywhere. Without proper research, you could easily fall victim to a rug pull or a security breach. Billions have been lost to rug pulls, Ponzi schemes, and smart contract exploits.
As the value of the DeFi market has risen, the number of criminals seeking to exploit it has also grown. According to a report from Elliptic, overall losses caused by DeFi exploits totaled $12 billion in 2021.
Now, with both sides, how can you invest in DeFi safely? Let's say you're still interested. You want to invest, but you don't want to get wrecked. Here's how you protect yourself. 1. Do your research. Don't just ape into a project because of hype. Check if it's audited. Look at the team, analyze security measures, and real use cases before investing. 2. Never invest money you can't afford to lose. DeFi isn't a guaranteed win. Be smart. Don't risk your rent money on a speculative bet. 3. Secure your funds. Use hardware wallets, strong passwords, and avoid sketchy projects. If you're serious about investing, protect your assets from hacks by keeping them in a cold wallet. 4. Diversify. Never put all your money in one project or one blockchain. Always diversify your investments to minimize risks. At the end of the day, DeFi is high risk, high reward. It's a financial revolution, but it's not for everyone. If you choose to invest, make sure you're doing it the right way. If you do your research and stay cautious, there are huge opportunities for you. But if you go in blind, you will lose money. A lot of it.
For now, the industry is still very much in its infancy. Mistakes are being made, and scams remain a common sight, but investment is being made to improve the security of DeFi platforms, and governments are expected to usher in new regulations to wipe out bad actors and ensure better protection for investors.
Companies are employing sophisticated data science and machine learning techniques to analyze data on public blockchains and track down fraudsters and thieves.
We've seen the huge potential of DeFi and the serious risks that come with it. One thing is clear. This is not just another crypto trend. DeFi is already reshaping finance, and it's a key part of Web3. It is shaking up the financial world. No banks, no middlemen. Just you and the code. But here's the real question. Is this the future of money? Or just another bubble waiting to burst? Some say DeFi will replace traditional banks. Others think it's too risky to survive. What do you think? Are you bullish or bearish on DeFi? Drop your thoughts in the comments and let's discuss. Hit that subscribe button for more deep dives into Web3, crypto, and the future of finance. And if you're serious about DeFi and Web3 investing, watch out this video where I expose the biggest scams and how to avoid them. Your money depends on it.